At Apex Radiology, we do more than just imaging. We provide answers, clarity, and peace of mind. We offer a full range of diagnostic imaging services, from X-rays to ultrasounds, CT scans, MRIs, mammograms, fluoroscopy, and interventional studies. We pride ourselves on accuracy and timely reporting because we know every answer matters. With locations in Kingston and Ocherius, our team is here to serve you with care and expertise. Call us at 929 Apex to book your appointment today. Apex Radiology, the clear choice for all your diagnostic needs.
Welcome to another earnings call here at Learn, Grow, Invest. We are moderating this call today for Image Plus Consultants Limited, also known as Apex Limited, Apex Radiology. They are listed on the Jamaica Stock Exchange as IPCL. I am Renee McDonald, Investor Relations Lead and your moderator for this call. Please join me in welcoming, as always, Mrs. Keisha Anderson, the CEO of Apex Radiology.
Hi, Renee. Afternoon, and afternoon to your community and to the wider Jamaicans who will see parts or the whole of this clip at some point in time. Thanks for having me again to acknowledge our end of year and to talk about our end of year results of financial year 2025.
Thank you so much, Keisha. As always, we look forward to the insightful presentation that you will give, and I look forward to the questions from the community that we will field at the end. Please note, just a note to our audience, the Q&A section is at the end of the presentation, so please do feel free to put your questions in the chat. We will mark them for Keisha at the end of her presentation. Over to you, Keisha.
Okay, so let us start with a word of prayer. Father God, I want to give you thanks for today. I thank you, dear Lord, for Apex Radiology and the mission that we do. I thank you, dear Lord, for every single team member, and I thank you, dear Lord, for those who support us, our referring physicians and our patients. I thank you, dear Lord, for the shareholders who put their trust in us, and I just ask now that the words of my mouth do justice to the efforts of the team, and that you go before so that I can provide clarity in all that I say. In your precious name I pray. Amen. Okay, so thank you and good afternoon again. So we're at the end of the financial year 2025, and though it will be no surprise because we normally give updates every quarter, I think the results would not be what our investors would have been anticipating or looking forward to. And while they are disappointing for us compared to what we're accustomed to, I hope that I'll use this opportunity to be able to explain to you some of what happened in summary again for the year, and more importantly, to indicate how we're using the lessons of the year to move forward. So our results, as you know, and the next slide I'll get to will speak to the profit being just in the region of 43, close to 44 million. And though it is significantly below what we would have done in the prior year, if we look at the company that's closest to us, listed on the Junior Stock Exchange, our results this year would have been better than them as a relative comparison over the last 2 years. The results are as a result of what is characteristic, I would say, of our industry, or the risks that are characteristic of our industry. So we know that our industry can be plagued by machine downtime, and this year we had that, I guess, like a whole whirlwind of activity where we had 3 of our CTs down at the same time, and we would have spoken about that in detail in the prior quarters, to the point where we saw in Q2 that we would have made a loss. We also saw that we were faced with increasing costs. Some of these costs we could have anticipated, and we did, because it had to do with the implementation of a new modality. But that, coupled with the reduction in our income from CT, would have been a recipe for much lower profit levels. In addition to that, we would have had some challenges in the year with the tightness of our cash flow as a result of the mix of our patients. So we do know that when we were offering services to a large extent, about 30-something% of our portfolio to the Ministry of Health, we would have not necessarily be receiving our cash in the same manner that we do from our other large payers like our insurance companies and of course our cash paying clients. So that would have been some of the challenges that we had last year. However, I can't sum up the year without acknowledging the great strides that we also made. So we had a full year of the implementation of our MRI modality, and even though we didn't achieve the results as quickly as we wanted to, we would have learned about how to improve our productivity and how to do our bookings to ensure we had a good mix of scans to increase the number of patients that we could see on a daily basis. So we see our revenues from MRI increasing significantly towards the end of the year. We'd also have seen our revenues from mammograms, which would have been our other new modality, increasing throughout the year. So those two modalities round out our suite of offerings and really mean for our shareholders that this is a company that is going to have sustainable levels of revenue into the future. Also, very importantly, we were able to identify and sign the joint venture agreement for the development of 33 Lady Musgrave, and I'll get to that in a little bit towards the end of the presentation. So though we did have some challenges, we also saw the things that we know are leading to the overall strength and guaranteed performance of the company in the years to come. So we learned the lessons, we take what we must from them, and then we move forward. And so we're looking now into growth and championing care, which I'll talk a little bit more about towards the end of the presentation. So let me do a recap by looking at our results for this year. So we know that our revenue would have gone down by 9.6% to 1.08 billion. If you look at where we're coming from in 2023 financial year, would have been closer to 1.2 billion, and then last year closer to 1.1 and now 1.08 billion, down 9.6%. Though our gross profit margins remained in the region of 65 to 66%, which is a good sign, means that our direct costs are being well managed. And the direct costs, for those who may not remember, would be our professional fees and the cost of the things associated with administering the scans. Our gross profit was down slightly, just about 7%, by 712 million. So that led to our profit after tax, the net profit being down to 43.93 million. And if we compare why I said it would have been disappointing for our shareholders and stakeholders, that in 2023 we were at 252 million, down last year to 224, and now at 43.93. So definitely not what would have been anticipated, down by 80%. Our scan count at 53,458 scans is pretty much, though, in line with our 2023 scan numbers, which were at 54,840. They would be, though, 10% below the 59,475 that we would have done in prior year. So when we get to the scan numbers, I'm going to talk a little bit about why our scan count, though almost akin to 2023, would not have given the same revenue results as 2023. And our earnings per share, of course, that our shareholders pay close attention to, would be down to 4 cents, down 79.3%. So if we look at a quick graph of our key performance indicators, we would see that though the gross profit margin looks reasonably well as the blue line, both the orange line and the green line are going in the directions opposite from what we would want them to. So our net profit margin is going down as opposed to up, and our admin expense ratio is going up as opposed to down. And let me spend a little bit more time talking to you about what that looks like. And I'm going to ask Renee to put up the chart of the actual quarterly results so that I can speak to you a little bit more and you can actually follow me as we go through. So let us start with, we have the 4 columns showing the quarters, and then we have the column in purple, which is the year to date, the overall year. So if we look at our revenue, we'll notice that in Q1 and Q3, the revenue levels were above 290 million. And in such a case, whenever our revenue levels are like that, you'll see that our profit levels also follow. Because what it means is that we're driving revenue at a pace that can cover our expenses, even with the increased cost of depreciation or the charge of depreciation and amortization, and even with the increased finance costs. So where we see that we would have had challenges would have been in Q2 when we made a loss of 16.25 million, and in Q4 wouldn't have been a challenge, but just not as profitable, when in both those quarters we did about 245 million in revenue. Our revenue, I spoke earlier in the summary about the fact that our CT machines, we had 3 down at the same time. And I wanted to kind of put that in context for our shareholders. So our CT income, if we look at this year versus last year, would have been down about 170 million. And that would have been on account of the machines being down in Q2. And then towards the end of Q4, we actually had less referrals as the Ministry of Health referrals that would normally come were reduced significantly due to the impact of SARA not utilizing the program. And I think I would have shared in Q3, in the start of Q3 or the Q2 earnings call about that memorandum that would have gone around to the hospitals to say that they're going to try to keep internal to the hospital any scans that they could do. So largely because the CT machines were down in Q2, but to some small extent an impact in Q4 with the reduction in referrals from SARA. However, here we see the benefit and the beauty of diversification. So even though we are bearing now the cost of financing the MRI and mammo units, and we're bearing the depreciation and the depreciation charge of those machines, the truth is that between those 2 new modalities, they compensated by about 140 million. So though CTs were down 170, those 2 modalities added 140. So we see the challenge that we would have been in if we did not have those 2 new modalities, right? So that explains our revenue, and we'll be talking a little bit about going forward. I'm going to say what we're going to do about that. If we look at our expenses totaled for the year 524 million, which was 46.4 million or 48.5% higher than the prior year. Why is that? Let me break it down for you. So the first thing is that we had the full year of salary increase. So remember, in the financial year 2024, we would have had to increase the salaries of our radiograph staff in keeping with the adjustments that were done in the public sector. And though other entities may have challenges with retention, we actually have no issue with retention. I'm going to talk a little bit about how we're even building our capacity in that area. But we have no challenges with retention, but we had to increase the salaries in order to ensure that the team members were being paid fairly and at the same rate that they could get if they had a job with one of the hospitals. So we got the full year impact of that. And so we see salaries going up year over year by 25.5 million. We see our electricity costs also going up by about 10 million, and our insurance costs 5.6, and our repairs and maintenance 2.1. So that's the breakdown of the 46.4 million increase in expenses. What this therefore tells us is that the level of about 125 to 130 million is where we can expect our admin expense line to average out about. The direct costs we saw from above the gross profit line at somewhere between 80 and 100 million, depending on how we're actually managing our inventory and being wise in terms of our procurement and ensuring that we're getting 3 quotations and just using more inventory items for doing more scans is why that line will move. So let's come down now. So we see based on the admin expense level being there and our depreciation amortization increasing by 69% to 44 million, which a large chunk of that would be associated with the new machines. And also we would have on our leases, and we have 2 properties that we lease now, a short-term lease at 3A Winchester and the longer-term lease that is at White River North in Ocho Rios. Coming down now past our operating profit line, the other thing I'd want to talk about and single out is our finance costs. So we see our finance costs increasing to 38.675 million, an increase of about 24.5 million or 173.1%. And that finance cost increase is in the main due to the costs associated with the MRI and mammo units, more so the MRI, but also we would have had some overdraft charges because remember in the year we did have challenges, especially if you look at the increase between Q2 and Q3 as a result of the cash flow tightening based on the delay in our payments coming from one of our large payers. And so that's explaining how the whole year kind of is broken down. And when you have such clarity of understanding the numbers, then you can understand what you actually need to do to improve the outcome. And I think the challenge that we have internally as management and the team is to ensure that we grow our revenue line to compensate for the cost structure that we now have. But it's a cost structure that's going to ensure that you have sustainable revenues into the future as our shareholders. Before I move on, just to look quickly at the ratios and just sum up again the KPIs, I wanted to speak a little bit about the MOH program, and just to say that currently the amounts that would have been due to us, if you remember last quarter, I would have told you as our shareholders that we actually sold some of our receivables to actually ease the cash flow situation, and it resulted in our bank charges, etc., decreasing in quarter four, and positive cash flow as well, because then what we were generating in terms of business, we were able to manage our expenses out of. Our understanding is that the new contracts have not yet been signed. So we had an extension from the Southern Regional Health Authority for 1 month, which would have ended in April. All the contracts expired in March. And our understanding is that, which makes sense and is prudent, that the ministry is trying to ensure that they settle with us before they incur any further debt. And they actually have given us the commitments around how the outstanding amounts that you'd see listed on our balance sheet as receivables will be settled. And since end of year, a good portion has already actually been settled, and the commitment letter indicates what will be settled in May and what will be settled in June. Thereafter, because the program is decentralized at the regional level, they will actually engage us to say what services they need. So I do suspect that where we see an increase or a larger amount of diagnostic equipment that is functional, we will see reduced referrals from those locations, but we anticipate then the referral numbers will continue and pick back up. So we know that in the Northeastern Regional Health Authority, there are not many options as it relates to CTs and MRIs. And we do know that the Southern Regional Health Authority would also be challenged. But we can anticipate that we should see moderate and to reduce levels of referrals in Kingston. And that's my perspective on it, not what has been necessarily told to me. And I'm sure there may be questions after, and I'm happy to take them in the Q&A. So if we go now to the performance indicators, just to sum up all that I would have said, we would see that our expense ratio is up, ended the year at 48.5%. We really want to see it below the 40% and trending down. Our gross profit margin remained relatively consistent if you look over the last 4 years, between 65 and 66%, and we're happy with that. And our net profit margin that had gone up in 2023 to 21% has come all the way down to 4%, and that's what we need to work to getting back double digits and above. Our total staff count, you will see that it's not necessary that we have increased our staff numbers, but between 23 and 2025, we moved from 78 to 83 persons, and the additions there would have been the technical team members, and that would have been where we would have seen the salary increases based on what the public sector adjustments that were done in 2024. So I think that we can reasonably say we're managing the business well as it relates to our direct costs. We're not necessarily growing in a large number of persons, so we're going to be increasing our productivity per team member. And really where we need to look at now is actually growing our revenue through our number of cases so that we can actually get back to the right.
Okay, I think we may need to give Keisha a moment. There is some technical challenge with that internet connection, so let us give her a moment. I do want to confirm that we are seeing the questions in the chat. So please, if you have any other questions based on what has been shared so far, please go ahead and put those in the chat. For the Instagram viewers, yes, we are taking questions from Instagram as well. So please feel free to share them there as well. And they will be fielded to Keisha as soon as she returns. And we're back.
That's what they call more than Murphy, right? So the last time,
Right on
remember,
time.
we were on a Wi-Fi connection. We said this time we're going to go on a Ethernet connection. This time the Ethernet connection went out and the Wi-Fi is working. Anyway, I'm not sure the last thing that you heard, but I was saying that we are pretty comfortable with how we're managing our direct costs, and what we therefore need to do is drive through to increasing our case count so that we can get back to the net profit levels that we want to see. So if we look at
that would have been the last thing we heard. So thank you. You can continue.
All right. So if we look at our case count now, let's go to our case count slide. All right. So remember I said that we're kind of back to where we were in 2023 with the numbers. So last year, 2024 was at 59,475 cases. In 2023, we were at 54,840, and this year we're at 53,458. So just a few hundred less than 2023, but the difference is a mix of cases. So if you look at where we were almost on par, ultrasounds were there, but it's a significant fall off in our CTs. And remember, I had indicated in a prior call that the CT actual revenue per case is far greater than our ultrasound and X-ray, etc. In addition, we would have seen a fall off in our nuclear medicine cases, which our nuclear medicine unit went down. We took it out of commission in September of last year. I'm going to talk about what we're doing about that for this year. And so those also would have accounted for a large amount of our revenue. And our mammo and MRI, though contributing, would not have made up for what the fall off in CT would have been. So in 2023, though the case numbers were about the same, there were a far larger percentage of CTs than we had in this year. And so that explains that it can't just be the number of cases, but also the mix of cases. That makes a difference to the revenue. And where we are now with the new modalities, they were, I think the last time they were about 9% of our total revenue and growing. Where we want to get to, I think I'd shared in the last call, was about 20 per day. We're still just a little bit short of that on the mammo side, and on the MR side, we're going to around 14 to 16 per day, and we're at about 12 per day now. So we're making steady progress, but of course we can't make up for the shortfall in the first months of the year. But going into the new year, we're looking good. All right, let us talk a little bit about the key milestones that I would have mentioned earlier. So the joint venture partnership, I think we would have done a release to tell the stock exchange and therefore the market about that it was signed off in the last financial year with Ripton Real Estate being powered by Ripton Construction. And there is also on the day of signing our agreement, we went to the site just to acknowledge it as what would I say now, a group of members from each side of the partnership. And they're pictured with myself and our company secretary, Carl Townsend, is Mr. Ripton Rogers, who is the principal of the company that we're dealing with. The other big thing that we did in the year, that I had indicated in the quarter, and I had given a precursor in our AGM last year, is that we had looked at the market and said, okay, so part of our growth is going to come from inorganic sources and part will come organically. So organically is our referrals from the doctors, both private and public, and inorganic will be us looking at the market and determining, okay, is there any opportunity for us to help consolidate the market and therefore give a quantum leap to our revenues, because besides increasing revenues, of course, if those companies have some things that we have redundancies for, so for example, marketing teams and accounts teams, etc., that would be automatic savings in the transaction. Therefore, that would redound to our bottom line profitability. So this was a view of the market that we looked at last year at the AGM, and we narrowed it down somewhat because we looked at the aging population, we looked at where we wanted to widen our footprint, and we are actually did our due diligence exercises, and we are in dialogue with 2 entities, which I am hoping that by the time we get to AGM, we'll have something that we can share in terms of a market release. But just to say that we're making good progress there, and it will redound to the benefit of our shareholders because it will give us that quantum leap in the revenue growth levels. Outside of that, I had promised to come back to the nuclear medicine unit, and just to say that the unit had been a much older unit, but it's reliable and it was doing what it had to do. And when it went down in September, we made the conscious decision that rather than put more money towards the older unit, which we were doing planar scans. The options, as I understand it in nuclear medicine, are planar SPECT, SPECT, and PET, PET. We were doing planar. In the market, there are 2 other providers. Dr. Clark, through his outfit, does PET, PET. UE was doing both planar and SPECT SPECT, and we decided that it was time for us to upgrade so that we'd be able to do the same that UE was doing, because it's only 3 sites. And as a matter of fact, there have been periods since we've been down in September that UE was also down, and I can tell it is a significant need. And nuclear medicine helps in the management of malignancies. It has low radiation exposure, and I gather it also significantly makes a difference in renal disease monitoring. So your oncologist and your nephrologist would refer to us. By us getting a machine that does SPECT, we can also have the cardiologist refer to us. So we made that conscious decision, and we took some time therefore to work through all the short-term challenges between Q3 and Q4, and we have actually ordered our unit, which is going to land and be installed for the month of June. So by June, we'll be back up and running, offering nuclear medicine studies. Now, the big thing is, if you look at the table that you're seeing projected, you will note that we had steadily been growing both the number of cases, because the demand is there, as well as the revenue from the service. The service just commands a higher revenue than, say, an X-ray. It's not that it's a heavily priced service, because we're also conscious that if you're managing a malignancy, then you will actually may need repeat scans, and remember, we are in the business of healthcare, so we're conscious of the role that we play there. But if you look at 2024, we had gone all the way up to 1,630 scans and 83 million in revenue, and then it went down. So if you think about that, that would have been a loss of, even if we're being conservative, 70 million for the year that we didn't get because our nuclear medicine unit was down. So come June, when that goes up, that will actually put a significant addition of at least $10 million more to our revenue, which will also make a difference to growing the revenue. And so that's just a picture of the unit. Some people get excited by seeing the pretty machines. And as I said, it will be installed in June, and we're going to be placing that unit at our 129 Pro location. So rather than get a new CT, even though that would introduce redundancy in Kingston, we are going to put the nuclear medicine unit, and we're going to delay the redundant another CT unit until we get to 33 LMR in the new financial year. And I should say that the net profit margin on nuclear medicine studies is about 46%. So that augurs well again towards getting our numbers back up as it relates to our net profit margin. What else are we going to do? We're going to grow our case count. So though we are looking actively at the inorganic strategy, even without that, we're growing our case count, and we have done a lot more now awareness exercises and specific introduction to new doctors of our services, and just ensuring that whatever we offer and any challenges, if they have any with us, we can address those so that our referrals will grow from the private patient base. Because whilst we anticipate the fall off, as I was saying, from Sarah in Kingston, we see the numbers remaining the same in our Ocherius location. We want to ensure that the patients who may not be able to access it through the public will be referred privately to us, or even from the same hospitals, because the capacity is always going to be there, and we don't necessarily think that the capacity can be met by the hospital. It's a matter of whether or not it will be subsidized, or persons will have to use insurance or find other options to pay for their scans. We also are going to be having discussions with the target entities. When they get to a point of us having to make any significant market disclosure, then we would of course do that. And we're also, as I said, looking at increasing marketing of our services. The other big thing that we're doing, and our chairman is very passionate about it. I mean, all of our team is, but I think our chairman is the one that drives it the most, is really our whole patient experience. And really the thought is to ensure that every single patient. So we know that the challenges with us would have been in the past. If anybody had something to say at one point, it was a telephone line. So I think we have conquered that. We do know there are challenges with our wait time, especially on days where we have patients coming out of fittings and emergencies, but we're working on that very, very deliberately through our patient experience to ensure that our overall patient experience goes to the level that we want it to be at. You will see if you follow our social media pages, we do get a lot of compliments, but from time to time, somebody's not afraid to tell us when we get it wrong, and we use the opportunity to address that. And then we're looking at the improvements in our productivity and other metrics like that, looking at our revenue per team member, looking at our cost per team member, things like that, and just looking at really how we deploy our resources, whether they're revenue, earning, or support, that kind of thing, and ensuring that we are on top of our game as we build a very strong and sustainable business model for the future for our shareholders. And then I just close off, because we're not all robots, and we do other activities that show that we do have or actively commit to corporate social responsibility, and we do things with our team members to have fun and build team spirit. There's a reason why we don't have high levels of attrition in the company, and so we supported Sigma again, as we always do, which actually is towards a good cause, but also very importantly with team building, and just a sense of letting you hear, don't people see a different side of you when you're doing activities either in fun or play that are a little bit more competitive, or use some physical exercise your body. We also celebrate our 29th anniversary in our church service in February, and I don't think I'm particularly proud of that, because I don't think a lot of companies can say they've been around for 29 years and just getting stronger and stronger. So we did that, and we gave thanks to our creator, because we know that we are but vessels, and we are important vessels, but we are but vessels used by him to deliver healthcare in Jamaica, and we have to recognize that and the role that we play. Additionally, we supported health fairs, and these are pictures of our team members with that, and we supported the radiographers in their medical sciences, Mr. and Miss Medical Science. Actually, I don't know if this is the radiographer group, but I know we sponsored Mr. and Miss Medical Sciences is a faculty, or the faculty of medicine or future doctors. And then we would have been a part of JMDA activities as sponsors of their annual conference. And this gives us an opportunity to actually just form relationships, because remember, a big part of what we do is support the primary care doctors. So when they have patients that they send to us, either they need updates on like verbal reports, that kind of thing, it's good when our referring doctors can put a face and a name to the radiologists that they actually interact with. And so I think that summarizes how I'd want to capture a year. Going forward, then it is a real focus on growth, as I would have said, and championing care. And the care is that we're really going to look at our customer empathy and ensure that the experience matches the experience we would want for ourselves. Our active governance, we are very blessed to have very strong independent directors who actually support on behalf of the shareholders and guide and push us to do better and better. Results and returns for shareholders, they are in our care very, very important, and we're focused on that. We recognize that we would have gotten lower dividends in 24 than in 23, and no dividends in 2025. So we don't want 2026 to be a year like that. So after all our investment, we have to hunker down to ensure we can give our shareholders return. And most importantly, the last thing, it's the reason why we are a trusted name and the clear choice for diagnostic imaging is excellence in reporting and our standards for how we do our imaging on behalf of you, our shareholders, our stakeholders, referring doctors and their patients. So that's what we're up to, Renee. I'm looking forward to the questions.
All right, wonderful. Thank you so much, Keisha, as always, for the comprehensive report. And just the background is appreciated, and I can hear the heart of the company as you speak. It is it is a blessing to witness and to experience. I'll give you a mini testimonial before we go into the Q&A. And I know I do this often, but you know, we have family, and our family needs scans. And most recently, it was our 4-year-old son who needed a scan,
Oh,
and
wow.
that was for kidney and bladder, as well as his adenoids. And so
Oh,
I
thanks
was a
for
little
sharing.
skeptical. I'm like, oh, you know, how are you going to manage the 4-year-old with this with this scanning? However, the team was caring, compassionate. They took the time. They had to scan it multiple times, but they did it nonetheless, and we were able to get the results. So
Oh,
I
wow.
I
Thank you.
can't.
You know, it's the best part about that testimonial is that I didn't even know, so you didn't have to call to get a
That is
favor.
true. That is true. So,
Yeah.
you know, thank you guys. Thanks to your team for the good work that you continue to do.
Thank you.
And
And thank you
we
for trusting us, you know, with your son.
absolutely. So we do have a few questions. We have
Sure.
currently we have two on Instagram. So I'll start with those, and then
Sure.
we'll go to the ones that we have here on YouTube. So the first
Okay.
question is, why was your 129 branch closed for March? Are there
Okay.
and well, it's a two-part question. The other part is, are there enough experts locally to conduct repairs to scanners?
Okay, so our location was closed because we were not doing CTs there. So the location would have been doing only ultrasounds and x-rays. And we didn't think in terms of the cost structure to run a location that it made sense for that when we could accommodate at our Winchester location. So at our Winchester location, what we did was extend our opening hours, and we opened on Sundays when the demand was there to ensure that we could manage all the patients that would have gone to 129 Pro and were now being redirected. The second part of the question about the experts, the machine was quickly diagnosed. If our listeners would remember, in 2023, we had challenges with that CT unit, which is also an older unit, and we had spent a good amount of funds on repairs, because I remember sharing that with the AGM last year. And we made a decision when it went down again that it didn't make much sense to put money into the old machine. So we were just about to ready ourselves for procuring a new CT when the nuclear medicine unit went down. And so we had to weigh in between. Once our cash flow could accommodate, what would we do? Nuclear medicine, with the demand being so great and only one provider, who at the time UA was also down, or the CT to build redundancies since we had Winchester open. And we made a decision through the board's guidance that we would actually just continue to extend hours at Winchester to accommodate and put the money towards the new nuclear medicine unit, and then have that be at 129 Pro location so that the patients could be more comfortable, could accommodate more. If we have to go longer hours with a new nuclear unit, we will. And then when we move to 33 LMR, we will get the second CT back in Kingston. So I hope that answers the question.
Okay, so I will ask 876 if that did answer your question, to just let us know over there on Instagram. And the
Okay.
other question from Instagram is, are you still getting cases from public hospitals? Which
Oh,
you
yes.
mentioned earlier.
Yes, we do. And I should say, so the public hospital referrals don't stop, because the capacity has not increased. So nothing has changed in the public hospitals. What has changed is who pays for the cases. So I remember in the last call, what I had said is that I thought there'd be a period of like readjusting. And I think we do see that, which is it's important to note, because we do see some of the same persons that would have come with the forms to get free service come now with insurance, which means that some of them could afford to even pay a portion of. So it is very likely that the subsidy was even more than what persons needed to be subsidized. So we do see some adjustment, but we also do see reduction in the numbers in Kingston, because I think that persons who now may have gotten it free would have to probably now save towards or depend on remittances, those that don't have insurance, that kind of thing. So we see the reduction in Kingston. In out of town, they were going all the way up until March when the contract expired. So what we see now in the months of April for the start of May is adjusting, and we see that adjustment a little bit faster, where persons are finding the way to pay for their studies themselves, So there's some amount of readjustment, realigning occurring. What I do know the hospitals on the Northeastern Regional Health Authority are doing is that when they do have cases that are in need, even though the formal program is not in place with a contract at this time, they are actually doing commitment letters to have the patients come. So there is still that being offered, but the extent to which it has been reduced, and I expect it to be some amount of moderation until the new contracts are signed. But it's not that the capacity or the need has changed. Both capacity remains low in the public system, need remains high. It's just a matter of who is going to pay for it.
Thank you so much for that, Keisha. So we're heading over to the questions on YouTube.
Sure.
And of course, more questions are welcome. If our viewers have additional questions, please feel free to drop them in the chat and we will have them addressed. So Jason has a very specific question.
Sure.
And it starts off with, what is going on with cash? Why did you have to enter a receivable recourse agreement? Why couldn't you do receivables factoring without the agreement, then pay lenders after?
Well, what I would say is that the way in which that we did it was very attractive for us. Normally, you can get into these agreements where they actually tie the repayments to the actual person who is paying us, paying them directly, which, as you can imagine, would be a little bit, or not a little bit, much more challenging doing that kind of arrangement with the Ministry of Health. It would have to go through several levels of approval. So we found the way that we did the transaction a lot more flexible, because we have the opportunity to collect the funds and then to pay down as we collect. And that's why we chose to do it this way. Also, the cost of the arrangement was actually very, very reasonable, and so we decided to do it this way rather than doing it the way that is being suggested.
Okay.
So both the arrangement in terms of the repayment terms and the cost of it was more flexible for us in the way that we did it, and the speed to actually execute was also much, much more flexible for us. And that, which I think is an important thing to the shareholder at the bottom. At the end of the day, how much you pay for it, whether or not you can meet the terms.
Yes, and I think too, what Jason might be getting at is just cash management, cash flow, and this is something that you've spoken about on multiple calls with us. It is, I believe, a reflection of the values or the strategy of the company, how you choose to execute on these things. So is there anything that you can share with the audience regarding just the thought process or the ethos around how IPCL handles cash? We can infer, but is there anything that you can say to the audience now about that?
All right, let me see if I want to make sure I'm understanding the question. But so what we do is that we have to maintain a reasonable ratio between our payments that we collect within a 2 to 3 week period and payments that we have to extend credit for longer periods. Based on the demand and what we were willing to do to support healthcare in Jamaica, we had grown our payments that we collect over longer periods to almost 40% of our overall portfolio. Now we're comfortable in relation to cash flow and stuff when it's closer to 30% of our portfolio. With the reduction in the referrals from one regional health authority, then we're getting closer to that. But the real key is not supposed to, in my estimation, worry so much about that. It's about growing the private referrals to a level that the public, even if we maintain the same numbers, becomes a lower ratio. In so doing, then we'll find that the cash flow challenges will be much further away, or the gravity of it will not be as significant. The other thing that we do is that we have, even though we're challenged like that, we try not to pass on that challenge to the people who supply us, because we also always want to command the best pricing, and you get good pricing when you're able to pay your suppliers on time, and maintain all the expectations of us. We do also have things like our loan payments that we have to ensure that we make on time, which they're always on time, probably ahead of time if they need to be, So it's really about carefully managing the ratio of the payment sources, as well as being able to ensure that we manage our commitments so that we can still command competitive rates for all the inventory items that we buy. I'm not sure if I answered your question, but
yes, you did. Yes, you did. That's exactly where we were going. And Jason has said thank you for answering his question as well. The strategy
okay, all
sounds
right.
good, and
Welcome,
he's
Jason.
trusting management. Okay.
Okay.
All
Well,
right. So
one thing your community, and I think our shareholders can say, and if anything, we over communicate. They tell me I talk too long and talk too much, but I want to make sure it's your business. You must know exactly what is going on with the business, And as I said before, I believe if our shareholders know, they can also help us to grow our business. And that's why our shareholders are the best people to recommend, advocate, and give us feedback on what to do to improve, So
exactly. And we certainly agree and appreciate the effort that IPCL puts into communicating with the shareholders consistently. So thank you. Rand is asking, so you did mention the update during the presentation. I don't know if there's anything else that you'd like to share, but he said last year you spoke about exploring acquiring another business. Can you give us an update on the acquisition plan?
I will invite Rand to our AGM. I'll have something to say then, I feel. What I can say is that we narrowed down the big pool of people that we showed you on that slide down to down to 3 entities, and we're in our discussions and we have done our due diligence. Our work is complete there. So we just reach the talking part, which sometimes can be the long part, right? But come to AGM, I'm pretty sure I'll have something to tell you, even if it's about one.
Awesome. That is exciting. That is exciting to hear, and encouraging, I'm sure, for shareholders as they're looking forward to what the next financial year will bring. So the next question is from Richard. And he says, while appreciating that the government is the biggest customer, what's the second best way to grow scan counts? Regional government partnerships or partnerships with near country medical partners lacking equipment? What are your thoughts?
Yes, that's good. Yeah, good. That's some good thought and direction of the thought. Thank you for that. So definitely with the regional health authorities, because I think now that it's been decentralized, which makes sense for the program, actually, it really does make sense, because the regions will know from the fees that they collect, user fees, and they'll know from the capacity that they have. I think they'll be better able to assess, who should actually get the support and the help, and other ways to help the Jamaicans living in their area. So the partnership with the regional health authorities is one thing. Outside of that is actually just ensuring that we continue to grow our name and our brand with the referring doctors. Quite a few of our doctors that work in our public system work privately, as well as their doctors graduating every day. And what I find with this generation is that they're a lot more entrepreneurial than my generation. And so therefore they try to open up their own offices and practices. And you can never have too many doctors in Jamaica, I don't think, at this point in time. So it is actually growing our brand, what we're known for, helping them to see how we help them to be able to help their patients, and ensuring that we get referrals, increase referrals, but we're also able to meet that demand. So that's where the customer experience comes in, because it does matter. And even though your doctor will send you somewhere, we see more and more people choosing where to go, word of mouth, either from a family member who experiences service, or they actually, the younger generation, they look on, I can't remember which gen it is now, if it's X, Y, or I think it's X. They look on Z, they look on the Google reviews and all of those things, because those things matter, because people comment on that to us, you know. And so we want to grow the referrals, but also ensure that we can deliver on the promise of the service. We know there's no doubt that we deliver on the promise of the excellence in techniques and the excellence in reporting. No doubt. I have no question to ask about that. It's just ensuring that when they come, they don't have to wait, or if they have to wait, they're told before that we're running late, so they don't have to, you know, be there a long time, the care that they feel when they go through the system. And so doing that will also help the doctors to feel comfortable that they're sending their patients to the right place. So our experience, our brand and our name with the referring physicians, and of course maintaining the partnerships with the regional level health authorities.
Thank you so much for that response. So there are a few things. That was our last question.
Okay.
In the
Oh,
chat.
somebody's missing today. What's his name again? Alain. Yes, with Alain. I feel incomplete.
I'm sure he'll reach out. I'm sure. But we did get.
They can always send questions to shareholders at apex-radiology.com that we answer. As a matter of fact, the last time I think we found that there were some in spam that we didn't get to. We didn't see initially, so we had to go back and answer those, but we always check it. So any question that wants to be sent can always be sent there to remain in dialogue with us.
Thank you. I was going to ask you to share that information with the audience as to where they can send their questions. There were two other questions that were sent otherwise that I'd like to just field to you before we go. One is about the funding of the new location. How is that being funded? And second question, which is somewhat related, does IPCL intend to take advantage of the increased junior market cap of 750 million?
Oh, wow. Funny you should ask that. Let me leave that one for last. So let me answer the first one. So as it relates, the partnership that we have with Ripton Real Estate is that we actually will, 50,000 or just under 50,000 square feet building will be built, and we will get our 20,000 square foot 20,000 plus, because something under 25,000 though, location, which will be on the ground floor, important for access by our patients, and the first floor. The actual design of the complex will be suited to our purpose. We'll have ambulance bays, just things to make it comfortable, easy parking, and a decent amount of parking, which is important nowadays in Kingston and St. Andrew. And we will actually get that to us, and thereafter the remainder of the building will be for the benefit of Ripton Real Estate. So it would end up being a strata property not owned entirely by us, but our investment in the project will be the actual land, which we would have acquired using some of the funds when we actually went public. And so we think it's a great deal and an agreement and a partnership in the to the extent that we are not in the business of real estate. So though it would have been a nice thought to own the whole building and collect rent, that's not really what we are focused on. We're focused on actually having assets that work. So we'll have our space and all that we need, and then any funds that we actually come into, we would prefer to use that to deploy to buying other equipment. So for example, the redundancy of that CT unit, putting in the interventional suite, that kind of thing that actually will give a return for our shareholders, which we think will exceed just the value of the rent per se. So that's that's the agreement. And then as it relates to your second question, so there are a lot of things that we're looking at. One I just spoke to, we're going to have to outfit LMR with another CT unit for redundancy and items for interventional suite, which is another big area which we've spoken about in previous calls about how that area is growing and actually has high revenue potential. In addition to that, we are looking, as we said, at targets. So in looking at a target, you have to figure out how you're going to pay for the target. And so even if we look some kind of debt structure in the short term, then that would be a great opportunity to actually convert it and continue to build long-term value for our shareholders. So our board will look at it. The communication just came out from the stock exchange, I believe, last week, indicating that the legislation is now passed and everything is in effect. And so we'll take some time to go through and understand and figure out the best way for us to approach the situation, bearing in mind the everything that would, as it would concern our existing shareholders.
Thank you for that. I think it's worth reiterating that shareholders are seeing the are seeing the fruit of the investments that were made at IPO. You are, as a company, doing what you said you were going to do. So congratulations on that. It's no easy feat, and you have remained accountable. So again, congratulations and thank you for being so consistent with that, being so intentional with that. And I do look forward to the AGM to hear what else is coming from IPCL.
Great. And we all look forward to the market rebounding so we can see something to do with the share price, which makes no sense nowadays. Not true?
Yes. So, you know, as I was closing, I said, "Oh, yes, we do need to talk about the share price because looking at the charts, it's painful. It
It's
is
very
painful to
painful. I mean, I
watch."
see it across the market, but when I look at ours, I see it's very painful to us. And we're looking at some of our activity and, dialoguing with the stock exchange. Because we do see some activity that looks, a little strange to us, but perhaps we don't understand. So, but
Right.
it's very painful because our fundamentals don't equal to what you're seeing with the share price, So.
That is correct. And
So I said to all the shareholders who bought originally, remember your shares are a medium to long-term investment. Don't panic and sell now. There's nothing with the fundamentals and the underlying performance trajectory of the company and how we're building sustainable revenues that would give you a cause for concern. Not even a reduction in referrals from the as I said, it's not a reduction of even the referrals from the public system, but just who is paying for it, because the fact is that people need scans to actually help in their diagnosis, and what we're doing, investing in like the nuclear med, etc., also helping treatment. So don't panic if you have no need to realize the sale of your shares, so you get back any of your capital, then just ride it through. This too shall pass.
And on that note, I will step backstage and allow you to have your closing sentence to your shareholders, should there be anything else you'd like to say. And I would like to say thank you to the audience for being here. Thank you for participating. As always, if there are any additional questions, Keisha did share their email address to which you can
Shareholders
send.
at apex-radiology.com.
Right? Share. I'm going to just drop that in the chat so that everyone has it, and we will be sure to add it to the description of the video as well.
Okay.
And also, if you'd like to add it, if you'd like to put your questions in the comment section, we can forward those over to the IPCL team for you as well. So over to you, Keisha.
All right. So I just want to say thank you again for accommodating us on this platform. And it's a great opportunity to keep in contact with our shareholders. And I want to say to our shareholders that though the year would have been disappointing for you, it is no more disappointing for you than it is for us. But we have focused on the things to take away from it as lessons. And what's important is that we are building sustainable value for you in the actions that we are taking today. So thank you for sticking with us. We know that you look forward to things called dividends, and we're working to return the company to a state where we'll be able to pay. But what you could do in the meantime is think that you're investing your short-term dividends for longer term returns as we actually invest in the company for the future. We thank you for the opportunity to partner with you as we support healthcare delivery in Jamaica. Thank you again. Thank you to our team members, our hardworking team members, and thank you to our board who gives us direction. And thank you to the doctors and their patients who trust us every single day as a clear choice for all their diagnostic imaging needs. Good afternoon.
At Apex Radiology, service is more than a word. It's our promise. Our dedicated staff is here to make the process as hassle-free as possible. From booking your appointments, to doing your procedures, to delivering fast results, we go above and beyond. It's not just about the scans, it's about people. Apex Radiology, the clear choice for all your diagnostic needs.